Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 8:33 p.m. Eastern Standard Time. This is a free market update webinar. I would think it would be a very important one. We still have people filtering in, so we shall begin. The session will be recorded and uploaded to the Clueless Day Trading YouTube channel. That's open and free for anyone to listen to on the free videos. Full disclosure, this is purely for financial education, not for any solicitation or advice. We have a new free trial member, Walter. Great gentleman I just spoke to earlier on. Welcome, Walter. So let me just go through a bunch of charts and, more importantly, share a couple of my thoughts on what's going on, which I think are very critical, and having a full understanding of your surroundings when you're trading or investing, which helps you either stay in a trade, take profits at the right time, and do what is effectively needed in these extremely volatile markets. So a couple of what you see behind you right now are the E-mini futures, the S&P 500 futures, the 15-minute charts that we use very effectively for our intraday and intra-week trading. Futures are down roughly about 6 points right now, primarily because President Trump has right now announced that he's asking for a national security investigation on automobile imports. As you know, markets don't like protectionist policies, and the fact that, and this was actually kind of mentioned during the day that he might be doing that. I think he mentioned it himself. And obviously there is a little bit of consternation as to why he's asking for a national security investigation on automobile imports. Whichever the case, we trade tactical charts, and we're prepared for any of any circumstances, good, bad, or ugly, as we clearly saw today, this morning. One of the things that you got to keep in mind is that what the Fed did this, and this is extremely important, what the Federal Reserve did this afternoon, as in it wasn't a Federal Reserve meeting, FOMC meeting, it was the release of the minutes from the last meeting, which showed that the Fed is not in any way or form hell-bent on raising rates. They will gradually raise rates depending on the economic data coming out, but they're not going to rush out there just because there is some inflationary data that's coming out a little bit stronger than expected to go out there. And as you know, their mandate is roughly about 2% inflation on the U.S. economy, inflation rate for the U.S. economy, nominal rate. And they basically broadcast in their meeting minutes notes that they are okay, and they might let the 2% inflation number climb higher before they get into a mode to raise rates on a faster pace. So that's great news. And that takes away what it does is extremely important for the global economy. And this is something all of you need to understand, that emerging markets, and you can look through that on EEM, have been on a complete breakdown mode. Now, I don't trade the EM. I've done it before. That's the ETF for the emerging markets. And let's pull this up here as I'm talking. We're down from what I read more than 10% over the past month or so. That's a pretty dramatic drop. And the reason behind that is if the Fed's on a faster pace of rate hikes, it pushes up the US dollar. It puts a lot of pressure on those emerging markets, economies, to service their debt. Their sovereign debt is all marked in US dollar. The US dollar is king. They don't do it in Chinese yuan. They don't do it in Russian rubles. It's primarily marked in US dollars. So if it's marked in US dollars and the US dollar is going higher because of rates are, as rates climb higher, the dollar is more attractive. So it goes higher, then that puts emerging markets in an extremely difficult position, and they have to devalue their own currencies, and that puts a lot of pressure on their economies. It's very simple. If the US dollar say, for example, in your own life, if you had to pay a larger amount of money to service your debt because the value of that currency is lower, and their currencies are pushed lower as the US dollar goes higher, then you are going to be in a lot of trouble. So if you had to pay, let's say you're servicing your credit card debt, that's your EM monthly. That's today. There you go. So so if you had to finance, if you have, let's say you're paying $500 on your credit card bills a month, and all of a sudden you're obviously paying in US dollars, all of a sudden that dollar is worth less, like those emerging currencies would be worth less as our US dollar climbs, then you would have to come up with more dollars to pay that $500, right? So that's same case overseas. So this is a very serious matter. And the Fed, by saying that they're in no rush to raise interest rates, in other words, the US dollar slipped from those higher levels today, helped out in a big way. And you can clearly see that in the form of this massive rally that occurred on the EEM or emerging markets from about 45.95 to 46.40. That's a big move for this ETF. All right. So so that's a big plus. The second thing to keep in mind is if they're not raising rates too fast, if there's no rush to raise rates in a faster pace, then that takes the pressure off our 10-year government bond yield and the 30-year government bond yield, but primarily the 10-year government bond yield, to ease back and not shoot past the 3.2, 3.5% mark, which would cause major disruption in all types of interest rates in our economy, which means, you know what happens, higher rates, bond prices plunge, all consumer rates go higher, mortgages, credit card rates, auto loan rates, things like that, and that puts a lot of pressure, and that's no good. Markets fall. So this was a bit of a reprieve from the tone of what the Fed said on their outlook for raising rates. So I hope everyone got that. Try to explain it as simply as possible. So saying all that, we have the risks are always there. What's out there? We have the North Korea risk, the summit not happening. We have the China risk with the tariff talks that are kind of easing back, and there seems to be more calmer heads prevailing on both sides. So that's a plus, but the risks are still there. And of course, we have interest rate risk, but that's been abated a little bit as of the Federal Reserve minutes this afternoon. So things are kind of moving along. Now, saying all that, it doesn't mean the market's on a one-way runaway train. But at least for now, the levels that we keep on talking about, as you all know, as existing members, that I keep on talking about, which is around 2748 to 2750 on the S&P 500, looks quite likely. So we're talking about roughly another 100, 250 more points before we hit another major roadblock. So let's see what happened today. Let's get into the charts here. All right. So all the stuff so far that I've mentioned makes sense to you guys? Yes? No? Is that my good friend Trent here? Great. Kathy said yes. Good. Hi, Trent. So saying all that, today was a classic example of what crusade trading does, which is we trade even in the most difficult circumstances. You wake up in the morning, futures are down 16 points, they plunge lower, markets are down 200 points, and then everything that I talked about, everything that I tweeted out and tried to guide my members came to fruition and more. And they were substantial profits. We don't talk dollar amounts here, but you can talk thousands of dollars in profits or hundreds of dollars in profits, depending on what size you're trading, that could have had within the 6-7 hours that the market trades, right? So the 7 and the what do you call it? Market trades what? 2.5 or 6.5 hours that the market's open, right? So classic volatility trades. Markets collapsing, everyone's panicking. People are talking about going short. Same old story. What I try to do, as you all know, I don't want to get into this long-winded conversation. I'm going to keep this long-winded webinar. I'm going to keep this short and sweet. Is I kept on looking at my charts, and I look at 2, 3, 4 different platforms, and one of them clearly told me this morning that it looks like the bottom would be contained, and that would be the ultimate platform that I use for predictive analysis, and that's the quad. This chart, the quad algo HFT chart, as I like to call it. And anybody, it doesn't have to be, you don't need to be a technical genius, can read this chart. And because I explain it, I put the comments down. I try to make it as simple as possible. So all of you guys, whether you're technical savvy, or whether you are a complete idiot at looking at charts, I try to put it in simple comments, so that you guys know what you're looking at. So the slow stochastics, which has been a very reliable indicator, specifically on the quad system, QUODD, the algo HFT version. These charts by now. Was all the way down here. How do I get rid of this? Hold on. I always run into this problem. Bear with me. There you go. So was all the way down here this morning, and this looks like they're starting to turn. Whichever the case, if you knew nothing about the market and you traded along with what I tweeted out, what I posted on my tactical alerts and charts, you'd have done extremely well. You didn't really need to do too much thinking. Just had to follow, because this was pretty, and I was here, predictive analytics, exactly as alerted of low of the day. So right here, I started to see these candle formations. We know exactly the levels of if the market breaches, we can go short in a hard way, but it was right there. And I look at pattern recognition, pattern symmetry, what happened before. Are those the major? Is that a major support zone? I matched it up with the basic simple internal, the slow stochastics. This is your fast stochastics, but I was more concerned looking at this, because by the time yesterday the market sold off, we were all the way almost down here. So when I started looking at this, and I said, okay, this is good. And slowly but surely, as things develop, because we're not idiots, we're not like BTFD, buy the you-know-what dip just because the market's down. We want to look at whether there's any technical signals coming out before we go out there and ramp up our trades, add to our trades. So you buy a little bit here, you see this thing turning. I kept on showing this every 15 minutes, every 30 minutes. Go through my Twitter feed, and if you're not looking at my charts, don't bother being at School State Trading. To be honest with you, you're wasting your time and your few dollars that you're paying for the subscription fee, because this is a very technical service. The mission statement is, as I told Walter, he's a new free trial subscriber, and I tell everybody, our mission statement is to remove maximum amount of emotions, because you can't completely remove emotions. You have real money in play. The bigger the trade, the more emotional you will be. I mean, that's a fact. All right. So bottom line is, we try to remove the element of emotion, which is nothing but a profit killer, both on the short side and the long side, and try to remain as tactical, as robotic as possible. The more I do it, the better I get. Now, not everyone has the same capacity, and some people have low risk tolerance. If you're an options trader, you have to have high risk tolerance. That's just the way it goes. You're down 50, 60%. You can't be panicking, so that's it, it's over. You got to look at the chart. You got to make a determination. Is that the time to dollar cost average, buy in there? Let's say you had 10 calls at 40 cents, giving you a smaller number, and you want to buy 10 more at 30 cents. If it slips down to about 14 cents, this really happened with the SPYs today. 14 cents, maybe you buy 10 more. That's $140 out there. By the time all is said and done, let's say somebody has 60 contracts. So 60 contracts with an average cost of 20 cents, let's say, as your cost averaging down, is $1,200. By that time, this is cooperating. The stochastics are turning. I'm posting real-time charts showing in many different formats that the market is going to go higher. And then I also have my internal knowledge, which is based on years of experience of working 20-hour days, sometimes, believe it or not, on Wall Street. Okay? I know how the game is played. I mix that in with the fundamentals, I mix it in with the technicals, and then I mix it in what my gut feeling is what the FOMC Fed minutes were going to say. And it's a beautiful, potent, powerful combination. Now, is this the first day something like this has happened? Nope. It's happened a lot. And in most recent memory, it happened on the 10th of May. It happened on the 15th. You're not talking years. I'm just giving you what happened within the past week or 2 weeks. It happened on the 18th. 18th. It happened on the 21st when everyone freaked out. That was last Friday, and we had a huge gap open on Secretary Mnuchin and the joint communique from the Chinese negotiating team that the tariffs are going to be on hold, and the market's gapped open 20 points. So that's what happened. And to all these technicals, every single time the slow stows, and I even have markers here. I mean, come on, even a 10-year-old kid, 8-year-old kid, a 6-year-old kid read this chart. Mentally they're a lot stronger than adults who seem to freak out a lot more than kids. And so truly speaking, this is the most simplest signal that you can get at. Now we're getting overbought, and when you get overbought, you reset. That's called a pullback to certain levels to reset the indicators. Overbought, oversold conditions. This is not a market meltdown. We are in an overall bull market. Now, many of you have different biases. That's your problem, not mine. Okay? We are, if you look at on the weekly, which I'll show very quickly, and the monthly, we are moving higher. Now, if we get into a bear market, then everything I'm saying, you do the everything that I'm showing, we basically flip it on the other side, and we trade accordingly. But don't sit there and try to be your own analyst, thinking that you are some economic pundit trying to guess that the U.S. economy is going to go into a recession and all kinds of stuff will happen. In a bull market, we get corrections. In a bear market, we get corrective rallies and sell-offs. Corrective rallies, sell-off. In bull markets, we get corrective pullbacks, and then we rally. Okay? I repeat again. In a bear market, you get corrective rallies which go higher, and then you keep on pulling back, down and down you go to a certain level. And in bull markets, you get corrective pullbacks and then a rally. Just the opposite. So saying all that, at this point we're getting overbought, and we will most probably be, if we go up a little bit more tomorrow, we're going to be pretty severely overbought at that level, and then we're going to have a pullback. Every single level is put in place. This is, as I repeat over and over again, this shaded area, this gap fill, this big fat line, big fat box here is not there to make my charts look good. It is a major support. On the SPYs, that's 270. On the SPX, it's 2690 to 2700 or thereabouts. You break that, you get an automatic trigger. Sell programs come in. The bulls, as I kept on saying, are scared. The bears, very frustrated that they couldn't bring it down here and break it. These things were cooperating. There was buying going on, and I'm just mentioning to you things that I've already shown in visual pictures on my Twitter feed. Feel free to look at it if you care about making money or care about losing less. How about that? Because the more you make and less you lose, that means net, you're moving forward. Retail emotional traders tend to do just the opposite. They lose more than they win because they're constantly chasing prices, not looking at things, and not looking at the overall tactical charts and stuff that I produce. And God help, I don't know how they do it in these type of markets. Most of them don't do it, and they blame the market, they blame whatever. It's not the way to go, guys. Okay. So saying all that, that's it. There's really not much to say. The candle started building, and then we had a fat sell program that right off this downtrend line. You got to look at these charts like the fine tooth comb. Okay. God has given us eyes to look at things. You don't. If you're driving on a foggy day through a mountainous path, in, let's say, in Vermont or New Hampshire, up in the East Coast, or in upstate New York, you stay focused, or else you're going to go over the cliff. Same thing with tactical trading. If you're an active trader or even a non-active trader, because I'm producing all the real-time charts for you to guide you through it. So look carefully. There's a downtrend line here. Look how precise these charts are drawn, because this chart didn't come like this. I structured it. The only thing that came are these candles, right? When you pull it up on your platform too. So I structured it so that you know every nuance that the market can pull, what the algorithmic high frequency trading programs can do. What more can you guys ask for? Maybe a $500 million lotto ticket that a guy in Jersey won? Yeah, well, we provide lottos, which are not 500 million, but worth a lot of money, those lotto option trades. So the SPY calls, which go from 14 cents to 50 cents, you do the math, how much that's up. 51 cents from 15 cents, okay? That's 240% on your money. That's a lotto. So what my charts are doing, they're literally handing out money. It's a fact. In the most difficult times, and you're refusing to take it because you just won't do the trade. Or some of you just won't do the trade. Or your mental bias is so screwed up because of your past baggage that you are just stubborn enough not to change your mental mindset. They say 70% to 80% of trading is mental. Well, if that's the case, mix that up with the tactical. You got to change that part slightly, and then mix it in with the tools that I'm providing, and you're in a much better position. You're in a winning position. Let's get into the chart here. So you look at this downtrend line, eyes wide open. Another downtrend line. The dotted line is always the pivot, 273.03. You run over pivot, you tend to move fast. That's exactly what happened in the last part of the day. This big burst. You could have bought, let's say you didn't buy the calls at 15 cents. These SPY calls, the 274s. Because you're too scared, you're hiding in the bunker, you're looking for diapers. You know, that's our term of saying, like, you know, when things get really rough, like, oh my God, you're panicking. So no offense meant to any diapers or babies. So saying all that, the market went up sharply. This is a 1 hour chart. So this is every candle is an hour, right? The day started here. This is pre-market. And then there was a big sell program of this downtrend line. That is somewhat standard procedure. Now, why didn't I freak out about the sell program? Because it was pretty big. It was just when we were up, like we were not up, we were down like maybe 60 points. Before we knew it, we were down 140 points. Very fast selling. That's what algos do. You don't like speed? Don't be a trader. Because these markets are driven by machines. They say in grandpa's market, as I like to keep on saying. No offense to any grandpas, including mine. So, you want to be a grandpa trader, then just sit on those swings and don't bother looking at the market on a daily basis. You know, a lot of great swing trades. You don't even have to look at it. You just leave it in there. Whether it be Chipotle, whether it be UTX, whether it be Alta, whether it be GWPH, the Cannabinoid Medicinal Company, lots of them. That's swing trading. Just leave it in there. Look at it every other day. Seriously, if you can. I can't. I have to look at the screen every 2 minutes. It's what I love to do, and sometimes I wish I wasn't looking at the screen because sometimes you make 10 hasty decisions when you have these type of moves. So anyway, one of the things that I kept on noticing was that the slow stows didn't even bother. They kept on moving higher. I also looked at the volume. The volume was low on this. Well, the volume was actually pretty high on this sell-off, and but the internals kept on telling me that it was okay. There's always risk involved. You want full comfort? Don't be a trader. All right? Trading is not supposed to be comfortable, to be honest with you. With my work that I put out there, it should be less uncomfortable. But this is not a comfort play. You want comfort, go lie in a sauna. You know, go get a massage or something. That's serious, all right? Trading is about positive stress. You're always stressed out a little bit, but you got to turn that into positive energy. And it's all of you are adults. All of you have faced things in life which have been difficult, I'm sure. And if you haven't, then I don't know what to say, because life's difficulty is what makes you a better person and a fantastic trader. So you should be able to, you know, control your emotions to a certain degree. Anyway, so it comes down, goes, then it starts to build. Again, it hits that downtrend line. That's a double hit. It pulls back, but this time the candle is still green. and then this happens. This was the 2 o'clock move that was predicted on the Fed comments, and then it crossed the pivot, and that's where we are right now. Now, technically, if we don't get a full-scale move down because of the Trump comments on national security and automobiles, which really, and I'm scratching my head, what's the national security if you own a foreign car? They put a chip in there so they know, like, what are you doing? I don't know. So if the markets are okay with that and kind of takes it lightly, then we should be able to, technically speaking, hit the upper level again, which will create a sell-off. And then that sell-off could be contained at this uptrend line, this white line here, which goes all the way down here, and then possibly move higher. Whichever the case, I don't want to get into the exact details, because everything's laid out on my Twitter feed. Otherwise, we're going to spend hours doing this, and I don't want to do that for hours. I want to keep this short. All right, let's move on. So this quad chart is extremely important. Anyone who wants to free trial the quad, I've been using it for many, many years. Feel free to let me know, and I'll send you the link, and you can directly get the free trial from them. And they have a discounted rate for all Crude Estate Trading members. Many of you have signed up for it. Some of you have signed up for it, and everyone that I've spoken to, they said it's been extremely helpful. So this is one thing I want to mention, and keep it real simple. Investing.com. I don't even pay for it. Like you guys, I've told you guys many, many times. I've told every single member that they should just put in their email and sign up at investing.com. You don't have to pay anything for it. They're providing you real-time, unbelievable visuals. Look how easy it is to read these candles. And you could just trade off this. So in the most simplistic fashion, if you just followed my and replicated that on your screen, and maybe you can replicate this entire chart because it's very detailed, different patterns are drawn, stuff like that. At least you can have it and draw some of the lines on it. Just go here, downtrend line, uptrend line, whatever. Let me do the part with these megaphones and things like that. And in very simplistic, this is probably the only thing you need to use if you don't have multiple screens, or if you're busy, whatever the case. You can see this on your iPhone. They have a great app. It's fast, and I check it all the time. I post a bunch of stuff from it once in a while if I'm not at my desk. And so this is this was the sell-off. This was the overnight stuff going on. 6 o'clock in the morning, and I kept on showing every single level that you need to be monitoring or moving on. Now, 15 minutes is a lot of sell. This was that big sell program that came in around 10 o'clock, but it was contained. And the way the charts are structured, the way I've drawn it, with a couple of funny comments here and there. They're not funny. It's true. These are the bear kill zones. I call it the bear genocide zone. That's exactly what happened. The dogmatic shorts and the bears just got thrashed, impaled, when this candle just broke loose and went nuts right around 2 o'clock. This was the Fed thing, and then continued more. And this is where we are right now, which features down about 4.5. So let's say, for example, you wake up tomorrow morning, and I always wake up thinking, oh, God, the market's going to be down today. I don't ever wake up saying, oh, we're going to be up 20 points, and which has happened a lot. 20 handles on the S&P when nobody wants to buy, such as last Friday. And then I don't need to remind people who actually are real traders. You know what I'm talking about. This was everyone freaking out. This comes Mnuchin and the Chinese communique, which I explained in my previous video, I knew was going to be a good one, a reasonably good one. They're not going to say, oh, I hate you. I came all the way to DC and you fed me crap. Now I'm going back to Beijing and I'm just going to retaliate with more tariffs. No. The Trump team is a very smart team, very smart economic team. Mnuchin is fantastic, and the people involved in that team, Larry Kudlow and everyone. Even Peter Navarro, he's a hawk, but he's okay. So whatever the case, massive move up. So I drew this chart here, as you know, since that happened. Lots of volatility. This is a 15-minute chart, so lots of volatility despite all that news. Move up, and then a consolidation channel which broke down based on the fact that yesterday Trump, the comments that he's not very happy with Chinese, they're dealing with things, and the North Korea summit might not happen. So what can we do? We had lots of tactical positions. We took nice profits. I did not go short yesterday, despite some members asking me, why don't you hedge? Because I had a gut feeling that this was not something that was going to turn into a full-scale crash, which it did in the morning. But it all happened overnight. So if you're not quick in the morning, you wouldn't be able to take advantage of those puts. And what retail traders did, a whole bunch of them, I'm sure out there, they started shorting the market right at this level. Oh, this market's done. Look at this, blah, blah, blah. Same old story. And they got burnt. And the hedge funds who started to short the market at these levels, I'm sure there were some, they got burnt too. So let's say, for example, tomorrow, this is yesterday's story. So let's say you didn't do anything, you didn't make a single dollar through all these massive moves. It's not about what you did before, it's what you're going to do tomorrow going forward. Like they say, it's not where the stock came from, it's where a stock is going is what really matters. It's the same thing in your life as a trader. So saying all that, let's say the markets pull back tomorrow. So the futures right now, they're bouncing off this 27.25 level, which was a major support level here, and can be also called the neckline breakout of this inverse head and shoulders, a complicated one, but that is a neckline. So it tested the neckline right now, as you can see, and so this is what it's doing, right? So this is the 15-minute thing. It's resetting. Doesn't matter. Let's look at this. So let's say, for example, the foreign markets first rally, then they sell off, and this has all happened while you're in sleeping. And they don't like this automobile import thing because it hurts a lot of German automakers primarily. We don't really get Chinese autos. Have you seen a Chinese auto manufacturer selling cars in the U.S.? I haven't. So maybe the Korean automakers, the Japanese. I don't know what Trump is talking about, the national security thing on autos. So what countries he's targeting. But the biggest sellers are Japan, Germany, Korea, South Korea, and the Brits, right? So they might not like it. So 27.26 is support. We could open down. We're down about 5 points right now here from the close. So we could drop another 5 points right there to the lower end of the megaphone. Maybe you can slip a little bit more. And there was this minor gap here where the Fed took off, and markets have a tendency of retesting where the breakout level happened. They do. So that's 27.15. So if we drop to 27.15 early tomorrow morning, pre-market, that means that we are going to be down 11 points here, plus the 5. So we will be down again 16 S&P handles, just the way we were down 16 S&P handles here this morning. We were down 1650. Look, markets are mechanical. They're run by algos, which basically are, what can I say? They just go by numbers. So we were down 1650 here. We could be down 1650 tomorrow. So what do? Panic again and do the same mistakes that you did today, which is do nothing? I hope not. Now, if we break this, we know that the downtrend line is here, 2710, and then that very powerful level of support which futures traders look at, which is around 2700. I don't know what's going to happen. All I know that we could very well open down here. So that'll be a 16 point minus 16 handle on the S&P, and you should be prepared. And preparation means that if you had some large intraday profits, such as those Amazon calls at like $3-4 that closed at 16, and you didn't take any profits, I certainly did. They went from $2.64. By the time I alerted them, they were around $3.30. They went to 16. That's 400% in profits. More than that. Okay? So, more than that. So the thing is, intraday. So if you didn't take any profits on that, what can I say? I say that a trader who didn't is stupid. And that's the only thing I can say. You're going to either take the whole thing down, or, I said Amazon was going to go to 1600. I showed it on the charts. Look it up yourself on my Amazon chart. And Amazon went to 1600. It went above 1600. It went to 1601.86. That's a big move from the 1570 level or so that I alerted to buy Amazon. Right? Okay. So I'm not going to go into this chart over and over again. Everything is out there for you guys to see on the Twitter feed. But the point is, what I'm trying to make here, look at these markets. They are extremely volatile, upside, downside. We're navigating it fantastic. No question about it. And this chart, 15-minute chart that I keep on showing every day, this is really for active traders. And anybody's an active trader. You got a nice profit, you sell it, you're an active trader. You don't need to trade every 5 minutes. Anybody who does that, just good luck. I mean, look, I'm not a crazy day trader, right? I get some nice profits, I'm out on that day trade. But I'm not a 5-minute trader. So this is not the service for you. Even though the charts are designed for perfection on volatility trading, you could use them to trade that actively every 5 or 10 minutes. Sometimes we buy a SPY call or a put, and within minutes, it's up 40, 50%. You can take profits. I'm not going to tell you when to take profits. I can tell you the levels you should be taking profits, because I don't know how much money you're trading with. And first of all, I don't want to go there because I'm not in the business of trading your book. You're in the business of trading your book. Let's move on. The second thing that I kept on looking at, and I pointed this out very strongly, this daily chart of the E-minis, that I had drawn this bull flag. Okay, we broke above the bull flag yesterday, right there. We hit exactly the level I said we would hit, which was the last sell point right there, 27.41, 27.42, right there, yesterday. This is the daily charts. Every candle is a daily, right there. And then we went back into the flag on that sell-off, where all of you, well, not all of you, I shouldn't say that. Some of you just panicked, like, oh my God, market's going down on the Trump comments and stuff. In fact, nothing happened. It still remained within the bull flag. Okay, and what happened today? This happened. We slipped below that. This was blood red. You can see that on my previous charts as I walk you guys through all day long. And then it created a monster reversal candle, almost off the 2700 level. You see that? See that candle? Look at the tail. It started building. It was red. And what did I say in one of my charts? Go through it. I said when that needs to turn green for a continuation of this power reversal that I'm starting to see. Remember, reversal starts slowly and then they speed up. That's just the machine's designed to do. There's some news comes out. Today was the Fed thing. There'll be some positive comment from somewhere. It's all manipulated. You want something like all fair and square and pure and honest. That's not the market. Life is, manipulated. So why can't trading? Trading is a purely manipulative game. And nowadays by machines, which are run by big investment banks, hedge funds, and other institutional players. I'm not running algos. So as this started to develop, you got to be in there. So this gave me more confidence that the market was not about to break down. If we had broken this, we would certainly short the market all the way down to about 28, 26.76, because that's if, of course there are ways along the way, there are support levels, but at that point we would probably be, if we broke really hard with a very large red candle, then that means that there would be a lot of pressure for it to test the 2018 break-even level, which was 26.74, which I guided everyone through here, all this stuff. So right now, it's a good-looking technical chart. Does this not mean that things can just change in a flash tomorrow? We could be down 500-600 points? Sure we can. But that's a black swan event. And you can't live your life thinking that when you wake up in the morning, you're going to die. You got to start thinking that when you wake up in the morning, you're going to live, you're going to breathe, and you're going to do something good. So that's the same thing with it. Traders are so scarred in the head with the baggage of volatility created by firms like Goldman Sachs. Did anyone read that CNBC article? In one single day, the day that the market was down 1,100 points, all the way back here, February 5th, that one, they made $200 million in one day. 200 million. Because they were long the VIX, and we were long the VIX too, but not to the degree that we should have been. And this was the big euphoric rally when most mom and pop and everyone's just, yes, the market could just always go higher. And I did warn people that this was wave 5, that this is where the euphoric stage comes in. Every day you walk in, stocks are higher. Every day you walk in, stocks are higher. It ends badly, technically and psychologically. So mom and pop got all giddy. Chat rooms all full here. I remember. And now I don't see I barely see anybody in the chat room, which is fantastic, which for all of us is a great sign. Because most of you are scared, you know what? And that's good. That means the market is not psychologically and technically overbought. Mostly psychologically not overbought. Because retail traders in general are extremely scared. Huge rallies, huge alerts being delivered, few people taking it. That's a good sign. That means you guys still have hope to make money. The minute I see the chat room fully crowded, everyone all like, super euphoric, time to short. And by that time, technically, we'll be overbought. It's always like this. I have never seen it changed since my Wall Street days. When clients, and you're not my clients, you're my subscribers. When clients got too happy, that means the market was going to drop within a matter of 2 or 3 months. The level of fear and anxiety and just pure terror just because markets are down 100 points is so high these days. It's a great sign that we have still room to move higher. Okay, so Goldman Sachs made 200 plus million bucks on this move here. So point is that since that happened, that's why I'm saying everything's manipulated. You think they didn't know? As the market started to crack for different reasons, they pushed it. That's what they do, up and down. Remember one thing, investment banks always say that they love volatility. Why do they love volatility? Because you, retail traders, which include all of us, tend to do the stupidest things. Buy low, buy high, sell low, lose money, and they keep on making money. That's just the name of the game. They love vol because it's heavy movements and you're not a tactical trader. You're just chasing prices. You're just losing money right, left, and center. It's happened to all of us. But what we try to do at Clueless Day Trading, we try to minimize that fact. You can't control volatility. You can't control each one of these candles every 15 minutes, except this is the daily. So I see more shape. There's nobody in the world who can trade 15 minutes every 15 minutes. I'm sure there are, but I don't know what they're doing. But that's it's just too much. You can't do that. So eye on the price, looking at this picture, it did look good, and the levels are all posted. The most I can expect at this point on a short-term basis this week, 27.45. That's roughly about 100 points. And then the pattern symmetry completion is around 2,800. I'm not even going there. I'm basically saying that this bull flag is impact. I'm looking at this level here. This was where the big selling came in back in March, and the pattern will be completed. Max around 27.56. Now, my point is, what's the use of me going through all these numbers and stuff if some of you are not even going to bother doing anything with it? But that's okay. I'm just doing my job. You try to do yours. So that's another daily that I kept on looking at. No technical breakdown, and so far, fine. the whole pattern changes if we break 2700 and fall rapidly towards the 2677. And where I'm not going to be sitting there just saying, oh yeah, the technical setup is still good. I'll be shorting on those type of technical breakdowns. This was another chart I was looking at, which is the actual S&P 500, and this was blood red, and it was, if you remember, if you don't need to remember, just scroll through my Twitter feed. This looked like this, with a red. This is red. It was an inverted hammer bouncing around this level, and like I said, it's testing the upper end of this gap. It's still within that range, ending the upper end of the gap. Kept on pushing, couldn't quite make it into the gap, and then it turned. By the time the day was over, this is what it looks like. Now, what does this tell you? That's this one candle, green candle, is not like just the crayon coloring. That's billions of dollars that went in short covering and new money. You got to respect it. And this was yesterday. It looked bad. It wasn't that bad. What's bad is this type of stuff. Nothing more to say. So this is another chart I was looking at, helped everyone out with that, kept on showing them. And I did mention when this turns green, because it started to go like this. It was first like this. Then it started to, at the body, started to expand. It was still red with the tail like that inverted hammer. Then it started to, and I put that up there on my alerts. And if you're not looking at it, I don't know what you're doing. And then it started to go green like that. That went from an inverted hammer to a hammer reversal. Big money coming in. The calls are moving off the bottom. All kinds of stuff going on. And then it looks like this by the end of the day. It's pretty good. It's a good finish. Futures right now down 6.5. And this is what it looks like. On your phone. This is where we are. Now, what does this say? This says we're going down while you're sleeping. You have your hot cocoa before bed or whatever you do. It's breaking. We're going to be down 7. We're going to be, by the time, there you go, 6.25. And I have a live video of everything that I'm showing. A live video, no audio, of what happened from prior to the Fed meeting. The Fed minutes release. From about 1:55 p.m. for the next 35 minutes. It's on the YouTube channel. Look at it. That's how we trade. So this, by the time we wake up, if we're down 16 points and we get oversold on multiple different indicators that I look at, it's going to be the same old song and dance. Now, 2 other charts that I put out there, which I was very simple charts, very simple. This is live future, 60 minutes. Okay, China tariffs on hold. This is where we started the move, and this is very easy to read. So I put that out there just for people to just look at this candles. And secondly, that's what I'm saying. Use investing.com for God's sake. How easy it is to see each of these things will either break your bank or make you loot, make you money. You can see the movements of these candles, every this is an hourly. You stay focused, and you see that on your own screen, then you look at what I'm putting out there. It takes 5 seconds. People say, oh, I'm so busy, I can't watch things. Yeah, who's watching things? I'm putting everything out there for you. All you got to do is quickly look at it. So that excuse doesn't count. The second thing that I put out there, which I thought, was a little humor, but powerful humor, if you're serious about making some money, is this cup and handle. Okay? Is this cup and handle. So here was, I said, the start of the day today, and there. The day started the 23rd. This was my chart. There was your cup. Very wide volatility. So I called it a cup and handle or a fat duck, right? Looked like a duck to me. So I didn't know if the duck was going to break down or whether the handle was going to get created. But then I started to see a triangle formation, as you, oops, I don't need this, start to develop there. Things were getting higher lows, slightly higher highs. Remember this? Triangle formation from basic chart pattern analysis. And if you don't understand this one, I don't know. I looked at my internals, which are telling me they're fine. There are no internals or anything here. This is literally a first grade chart. Show it to your kids if you have a first grade kid. I bet you they would tell you before this even happened where it was going. Guaranteed. Kids are smarter than us. So then comes the Fed meeting, big breakout. At that point, it's a full cup and handle breakout. You saw it and you see it live on my YouTube channel because I recorded. I left the screen recording on. That's the ultimate teaching tool you'll ever find. And the money keeps on printing. So just the simplest one, if you bought a $1 call, just hypothetically speaking, by this time, let's say they were around 70 cents here. They were 1 here. When this breakout happened, they're at 2.5. It's big stuff. And then the big short squeeze at the end of the day at 4 o'clock. And this is where we are right now. Any questions, guys? Because I'm going to wrap up. I'm just going to skim through a couple of quick charts. I showed you this. Now, this was a classic example of a fantastic play. AutoZone. Told people to buy it around here. We've traded AutoZone many times before, all the way from down here. Okay? And we took profits along the way, and the stock went to 800. Many of you remember. I know Trent does. Hey, Trent, what's up? You don't even say hi? Okay. So this is the earnings place. So we bought it here, and the calls went up 120%. Now, there was a gap here. What am I doing? I'm just looking at the gap and saying, oh, yeah, it's definitely going to go higher. No, I see the reaction at the gap. Once you see the reaction at the gap, and it's an inverted hammer, and it can't go, whichever the case, I sold because it was up big. Stock was up, what, 45 points? Started running, shorts get squeezed, and then a big sell program. Now, I didn't partake on the short side because I was busy with other stuff. I should have, because it would have been huge. This move down. I haven't looked at the puts, but I believe the puts would have gone up at least 600% on this sell-off. And then what does it do? It comes down to the same levels, support levels that we had previously bought the stock in. Not previous to earnings, but previously bought the stock in back in April. And then it bounces. And the stock was up $20. I didn't play it because it's too small. I mean, I'll take a good look at it tomorrow with the internals and everything. But if this climbs, the next move is going to be around 660, right there. So you got another 40 points to it. And if it really breaks out, it might test the 720 again. We don't know. But this was a classic example where we buy it here, we sold it, and we said goodbye. And this is what happened. And that green area is a gap going all the way back. The next one, very quickly, is ALGN, Align Technology, biotech company. This is a fantastic looking chart. Now, it's a biotech, so it's get this little sell-off once in a while. But this is a very good looking chart. And this stock is very much on the radar of a buyout. And they raised their guidance and said good things, I believe, yesterday. And this stock, we've been trading it all the way from down here, from this level. So this is a good looking swing chart. You don't need to watch it every 2 minutes. You buy it and you leave it in there. Buy some June 15s. You can buy some July calls because the stock is on a very, very nice uptrend. Let's take a look at this one. NVIDIA, a beautiful trading stock. And this chart is structured for perfection. It goes into the gap, you buy it. How many times have we done that? And then you trade it. If it goes up for 3-4 points, good. Nvidia sold off today, and but it was still holding its ground pretty good because of Micron, because Micron's was holding great all day, great stock, and now it's now it's at a downtrend line. Will it get up to 250? Looks likely. Futures are down 7.5 right now. Told you. Want to see what it looks like? Come on, come on. There you go. It's going to come down right here by the time we get done with tonight. And it's getting very nicely oversold. We're probably going to wake up down 16 tomorrow. Just letting you guys know that, all right? Futures. So, you could just trade this chart. You buy the gap and you sell it right there. And then you see the reaction. If it breaks out, you buy it. You don't need me. And if things go right, the stock's going back to 254, the upper gap. But it's volatile. It goes up and down, goes up and down. But you see the pattern? Here's Micron. I came in late on Micron. I initially bought Micron down here. Then I hate myself for it because I was looking at Micron just a week ago and I didn't get into it. And the stock at that day was around 51 or so. And Micron calls it damn cheap. They're 60, 70 cents. They go up to $2, $3. And this is where Micron is today. Does it look like it's it's going to crash and burn? Sure, it can do a little red candle, but it's going to run 60 to, and I bought the June ones all the way there. At least 63. It's going to test the highs from what it looks like. But once it hits the 61 level, obviously there's going to be some profit taking. So you got to manage your trades. But this is a good looking chart. A swing chart. Chipotle, I have nothing to say. I walked you guys people through it. This is a bull flag breakout. I don't know if the stock's going to go to 520. That's my optimistic belief that by sometime by June, I have the June 15s. If not, I'll roll them out to July. The stock gets to 500 and completes this pattern. We have walked people through Chipotle many, many times. We were out of Chipotle during this level here because it was way too volatile. We've traded a couple of days, mostly on the long side. And then when the new CEO was appointed, the gentleman from Taco Bell, I said it, you got to buy the stock. And that was down in the 280 level, 280, 290. Did I hold it all the way here? No. I traded it, then we bought earnings. And this is what happened. Now it's in a different ballgame. This is a good-looking technical setup. And the stock can, 448, 450 right there is just around the corner. At this point, will there be a pullback? I think so. But if it busts a move, it's going to go to 460. There's the futures. Did I tell you it was going to go there? There we go. Let's get down here. We're down 9 now. Now it's speeding up because that's how futures traders, Globex futures works. They don't like that Trump comment. So they're finding a reason to do some trading. I don't think President Trump will ever put a 25% tariff on foreign automobiles. That is crazy. That's going to hurt our automakers. That's going to hurt them. That's not good policy. He just likes to say it, just to get a negotiating stance in. This is where we are, and it's going to try to hold off a little bit, but I still think we go here.
Hey, Clue, I got a question for you.
Make it quick.
All right, sir. I know you use the 34 and 50 moving averages. Do you look at the 8 and 21 crossover?
No.
Okay.
But it doesn't matter. I use the 5. I use the 20. You can use 821. You can use 13, 20. You can use whatever. But I used the reason I use the 5 because there are 5 trading days in a week. Makes total sense to me. I've used the 921 before. People use all kinds of stuff. I like to use the I like to use the 5. I like to use the 5 and 20. You can use 5 and 13. It really doesn't matter. To me, it matters because it makes me money. Does that answer your question?
Yeah,
Who?
I'm good. Thank you.
Yeah, who's this? Who is that?
It's house. It's house, man. It's
Oh,
house.
I didn't recognize your voice, man, because we have I thought it was that we have two new members here. Okay, this other one, for example, again, another case of a swing chart. All right, it's GWPH. This is a powerful company. I don't want to get into the fundamental of it. They're getting almost getting full FDA approval for children's epilepsy, cannabinoid medicine. Come on, we've been trading the stock back and forth and telling people to go long swing. How many times have I said that? This chart is so clean cut and dry, it's not even funny. So when people give me a bag full of excuses that they can't watch their screens, why don't you buy something like this and just sit there? Buy them a month out. You got enough time if it jostles around to cost average a little bit down, whatever. These calls, and I'll be the first one to admit, I didn't hold the original calls all the way up. They went from $1.80 to $20. And the stock's still going higher. It's going to go to $210. Mark my words. And before that, it's going to do this. It might do this. Now, this is a monthly chart, so all the noise of daily and weekly are condensed within this candle. But when you look at something like this, you gotta respect it, guys. Gotta stop smoking the hopium of like, oh yeah, maybe this will happen, that'll happen. Just these things you just gotta buy and hold. This is telling you billions and billions of dollars of real money have gone in. Okay? Do your own fundamental analysis. Don't become too much of an analyst, as I say, because none of you will ever truly know what's in a real balance sheet, what's in an income statement, and all that stuff. Trust me, I worked on the street for a long time. Doesn't matter how smart you are. The worst traders and investors are accountants. Why? Because they're the second cousin of an analyst. To be honest with you, too much analysis paralysis. You look at something like this, you gotta get excited. Does it mean it's going to be another green candle like that? Yeah, over a month, yeah. I have different charts on GWPH. This is not a day trading chart. So I had GW, let's see here. Okay, there you go. So that's your trading version of that chart. And that still looks damn good too, with all the short-term levels where it can go to. So that's it, guys. Kathy, what do you mean more fear? There is what's it about North Korea's senior envoy renewed a threat to call off a plan. Yeah, it's all old news, Kathy. It's all old news. North Korea is going to. They have their own negotiating thing. They said they would go into a nuclear confrontation with the U.S. I just read it. Okay, so obviously somebody's pissing off somebody, and here North Korea renews threat to call off planned summit with Trump and warns of a nuclear to nuclear showdown. I mean, it's like a fat kid just mouthing off. Sometimes Trump does that too, right? They're both fat. So bottom line is that maybe they should both lose some weight and just calm down a little bit. And the North Korean guy, he's not a nut. He's a very smart guy. Believe me, he knows how to play the game. We can expect all this. The futures are done 9. Whoopee. This is the last thing I'm going to tell you guys. You want to be a successful trader at Plutus A Trading? The tools are all there. The charts are phenomenal. No question about it. I'll say that. Every day I try to do something better. It's totally up to you guys how you figure out how to manage your trades by using the tools. The only way you can do it is through practice. Even if it's a very small amount, you got to be in it. You got to be in it to win it. If you don't do it and you're sitting there thinking there's a perfect moment, which there are, which very few of you ever take advantage of, I don't really care. You're not paying my bills. I got some big debts to pay. Okay? So I got to be doing my thing to put my money aside and do the right thing. But a lot of you are simply wasting potential opportunities over and over again. And and then blaming everything else. I love you all. You know that. My charts love you guys. But you got to show the love and act. If you don't act, nothing will ever happen. Have a great evening. We'll see you guys tomorrow. Let's see. Futures down about 9. Probably open down 16 points, like I said, down here. Bottom of the megaphone. Will there be a bounce? We shall see. Most probably, yes. Generally speaking, last thing I'll tell you from what I've seen, we don't get big crashes before Memorial Day weekend, not before any major national holiday. Now, these markets are different, I do admit. They're a heck of a lot more volatile, but I don't expect any type of massive, crash and burn prior to that. But again, we're at those levels where the market can easily pull back, and all the charts are laid out. So we shall see. Let's take a last look at the daily. This is where we are with the North Korean threat. And again, concentrate on the bottom of this level here, and of course this level. Bottom uptrend line on the bull flag, that's around 27.14. We're at 27.22. That's another 8 points from here. Again, we come to the bottom of this. This is how great numbers work. We come to the bottom of this. That's 16 points or more. Minus 16 on the E-minis. Is it time to completely panic? I rest my case. Have a great evening, guys. God bless you all.